Well, it's year end, and this is a great time for us to look into some great businesses. And one of them is Facebook. It does not need a lot of introduction. And what we are curious about here is the fundamentals and how has Facebook been performing so far. Right. So now you can pause at the screen and read the disclaimer. All right. So let's deep dive into the fundamentals. Now, this is the first thing that I look at to see if the business is still doing well. And in the year 2021, here we can see even up to quarter two, there has been a jump of revenues. So it's making about 100 billion over. And this is just up to Q2 2021. And there's still two more quarters to go. So now you can see that the net income and the cash flow is still increasing over time. And if we look in terms of percentage, we can see that the cash flow is around 47%. And at times it's even about 60% over. All right, and what we can see here, we can see that the net income, it's actually also increasing, and it has been about 37% right now. And now, not many businesses that is, listed in New York Stock Exchange. It has about 8,000 stocks. But the thing is, these 8,000 stocks, not more than 50% of the companies that makes up to this kind of net income or even this kind of cash flow. So there's only a small fragment of these companies which are great. So it's even less than 1% of the companies great that has this kind of growing revenues, net income, and cash flow at the same time. So now let's look at the growth, the revenues growth here, and right up to now in the TTM is already 22%. So right now I'm pretty sure if there are two more quarters to go, this it will actually surpass this number right here, this percentage 22. It could even end up about 30% by year end. Right, the fiscal year it's ends on December 2021. Right, so to have another annual report. So right now I only have December 2020 annual report right now. And if we dissect the annual report and we look at the main income generator or main revenues generator, now Facebook is actually dependent on 98% on digital advertising. So that's the mainstream of income that's coming to Facebook. So there's only 2% of the others right here. Right. So now if we look at Facebook revenue streams by geography, and what we can see here is US and Canada is the biggest, 45%, and you have second biggest is in Europe region. Then you have Asia, 23. So and then you have the rest of the world, 8%. And the question is, which is the fastest growing region at this moment? So let's break it down a little bit. So if we look at the fastest growing region right here, and what you can see is actually Asia Pacific has the biggest growth. And this is comparing from 2019 versus 2020. So there's a big jump from here to here. So comparing, it has even the closest one, Europe, it's already more than double the growth of Europe region. And US and Canada is pretty much mature. And at the end of the year, you can see that all adds up cumulatively, it still attributes to about 22% growth entirely, right? So that's still pretty good, I would say. And if you look at market share, Facebook, now how to know if a company is really dominant? You can see that this Facebook right here, because market share changes over time, and it has a huge separation even to its second competitor right here. So you might have Twitter, the purple color line, which is not really consistent. You have Pinterest, which is actually almost at the second, but it's still not very significant. The rest of competitors right here. Okay, so it's considered it has a monopoly characteristic, which I actually love this kind of companies like Google and Microsoft. They do have this kind of characteristics. Right. So now the next question is, how many active users worldwide. And this is as of, if you look at the annual report, this is as of Q4 2020. All right, Q4 2020, we have this extraction. And I went into the quarterly reports on the Q2 2021 to extract this number right here added. So right now, of course, we won't see the full potential of growth right here. But what we know is that, okay, I skipped this part and I took this part over here to average out the annual growth. So it's actually growing about 20% annually for the past 10 years right here. So pretty solid. All right, it's climbing steadily. So now with about 2.9 billion, and if we look at the world population, is about 7.9 billion. And what is off limit to Facebook? Because China has its own social media network, which is Tencent. So this is off limit to Facebook, and there's still around. Let's say if we take this, deducting this number right here, we still get about 6.5 billion. And Facebook has about 2.9 billion users right now, and there's still about 3.6 billion out there. But of course, we know that you have like aging population, and you have like below 12, because I'm sorry, under 13 years old are not allowed to create account. So even if I say you have like 55% untapped market right here, maybe it's only about 30%, right? So that's too much number to deal with if we really run into these numbers right here, and the under 13 or probably above 70, which is not really active in Facebook. So that takes up quite a number of that in this part. Maybe you only have like 2 billion potential people signing up for into coming into active users, and populations are still always growing. Well, the best part is that you have births more than deaths every day, right? So, and this number is always ticking in the worldometer. All right, I got this from worldometer. So you still always have population growth more than death. But of course, because of COVID, you have a higher number of deaths this year, and also lower birth rates. But nevertheless, this is more than double, right? Which is good for the economy worldwide when you have birth more than deaths. Alrighty, so now let's go to what we can see. All right, the most popular social networks worldwide. So this is as of July 2021. It's still fresh from Yawen. So this is also ranked by the number of active users. So you can see that Facebook is, yep, it's the dominant one. Then you have like YouTube, which is under the company of Alphabet or Google, as you may know it. Then WhatsApps, which is not fully monetized yet by Facebook, owned by Facebook. Instagram is also owned by Facebook. Facebook Messenger is also owned by Facebook. And then you have WeChat, owned by Tencent. So this is the one in China. TikTok is not listed yet, and there have been talks about the IPO that this is actually coming through. So you can see that Facebook has been at the top dominant position. So this is all in Facebook. At least four social networks apps that is actually dominating the top five space right here. So, well, if you don't put your money here, where would you put, right? Okay. Now, of course, you can see Telegram, Snapchat, and the rest of it. They're still not that significant yet at this moment, but they're climbing. All right. So, yep. All right, wouldn't blow this up now. Already explain. Whole list to go. Right, zoom out. Now, you might wonder which country has the most active user. Now, right now, what you can see here is India has the most active user, and it's actually India itself. It's already more than US population, right? US is like 330 million. So you have 340 million users in India. Then in United States, you have 200 million. So that's more than half, basically. And India is about half. So you can see when the more people use this network, the more, it's a self-reinforcing cycle. We go into that, right? So you can see that, all right, I actually took this table right here. We know that China's off limits. India with this 340 million users, which is let's say if they have about 1.4 billion in population, so it's taking about 25%. And US with 200 million is about 60% of the entire population. Well, Indonesia is great. Indonesia is like 51% of the entire population, which is using Facebook, right? So pretty cool, right? Now, if we look at competitive comparison, I would like to really do a heat map, and we take like the top 10 social media networks or internet services company. And when we look at this heat map right here, and what we can see here, yes, Google has a dominant revenues right here, right? So it's about 220 billion. It's making quite a great, I mean, great net margin right here. So this is by market cap. Of course, by market cap, they are the biggest. Then coming to Facebook by market cap, they are the second. And if you look at the net margin, they are the highest. All right, so they are the highest. Facebook, they are the highest right here, and the blue color size of the bubble is the market cap. And in terms of revenue, it's 100 over million, right? So it's positioned right here. And of course, Tencent is pretty close, which is China's Facebook, very close to Facebook, and it's making great revenues. Sorry, great net margins. And if you look at these kind of maps here, then the rest of the competitors are quite insignificant. They have a far separation, and they're pretty small in market cap. All right, some of them are growing a lot in revenues, but they're still not making money. So you have negative 22% for Snap. Then Pinterest has started just to make money for the past 1 or 2 quarters, and still growing pretty well. So where would I put my money? I would put my money in places like this because these guys are the main dominant in the industry right here. So really not much to say about this. The map tells us most about the characteristics. So, okay, now again, to track revenues of digital advertising companies, we might look at a few big ones right here. But of course, when you look at Google and Facebook, it dwarfs Twitter and Yahoo right here. So they are pretty insignificant, the rest. So this is just another evidence to back it up. But of course, this is just up to year 2019. And this kind of data, they come and go, all right? So they don't actually stay in the internet forever. If you ever get this kind of data or statistics, then you snapshot, keep it in your file, and you might want to look at it the next time, right? So okay, now the wonderful thing about this business is that it has network effect. So what is network effect? Network effect is that you have now, let's say if you have 3 users in the platform, then the potentials would be 6. Now, what does it mean, potentials? So the potential connections means that this has to be going 2 ways, all right? So this guy can call this guy and this guy, all right? So 2 ways. So this can sum up to 6 potential, 2 ways, 2 ways, and 2 ways. So basically, it's about it's a 3 times 2 right here. You get 6. That's the equation of it. All right. So okay. Then you have like users, 4 users. Then you have 12 potentials. So you have more linking, and 5 users, 20 potentials, more links. So as you can see, the more users that comes inside, just the potentials could go exponentially increase. So that explodes, right? So this can be reflected in the revenues, and we'll see that later because it has a self-reinforcing effect cycle where the more people use the platform and more it becomes valuable. So think about it. If you want to advertise, okay, let's say if you're selling something, it's what you can say is a business to consumer, right? Say if you're selling some kind of soap, you really want to use platforms like Facebook to advertise, right? So because it has like a 2.9 population out there, and you can select the countries that you want to advertise that, right? 2.9 billion. I mean, you want to choose a platform like if you really want to spend advertising, you want to go to a platform with only 100 million users. You want to go into Facebook, and that's where you can leverage the most on the network effect. And that's where everybody is looking at, and a lot of people spend a lot of time looking at Facebook. It's also a very sticky business, and if you notice that you sign up for new applications, you might sign it up with Google or Facebook account. So it's less now. This is not the priority. In those days, the past decade, we used to sign up. Like the past decade, we used to sign up. Accounts, apps by using our own personal email account. Now, Facebook and Google has become our main identity, right? So it's going to become sticky, and the more you sign up with more apps, the less you're going to delete your account in Facebook or your Google account, right? So now it's hard to break this kind of big tax. I'm pretty sure a lot of people will ask you if you have what's the risk if investing in Facebook? Do you see antitrust as a big risk? They're trying to break this new big tax. But think about it. If you have photos of your families, your memories, your fond memories, which is actually stored in Facebook for free, maybe 10 years, and then it's not even taking up your hard disk space. All your photos, your videos, and even probably you're selling you're making good business out of it on digital marketing. And really, it's some kind of it's so sticky, and we call it a high switching cost nature of business. So you wouldn't want to delete the account in an instant. So even if antitrust, saying that you have data scandal, they're selling data to Cambridge like in year 2018. So there's still the users are still active users are still increasing over time, right? As you can see in the previous charts. Now, let's take network effect to another level right here. So let's simulate that. And then we saw nodes, right? And then let's expand a bit further. With 10, you get 90 potentials, right? So now, how about 20? So it goes up all the way to 380. And this really reflects, you see some samples of the companies their revenues are exponentially increasing. So it's almost like mirror imaging the network effect, and which companies are really reflecting this kind of performance. And you look at that, let's say I put the largest or the most common six companies. You can see that Pinterest has the same effect, Snapchat, definitely Google, of course, yes, Facebook, Amazon, and Alibaba. All right, it's not just social network. And e-commerce is also another business that actually leverages on network effect. And if you look at the revenues, it's actually increasing in what you can say is that they're increasing exponentially. So it's not really a linear line. And this is wonderful because if you put your money there, and it would grow even exponentially together, the capital returns. All right, revenue is the main drive of the stock price. And of course, if you look at the financial health, the very first thing is that I look at the assets, whether it's like two times more than the current liabilities. So current assets, it has to be more than all right, current ratio has to be more than one. In this case, well, we have 80 billion over 14 billion. So it's definitely more than one. And this is almost like more than four times, right? Then, of course, your long-term assets is also more than long-term liability. And these current assets can even cover long-term liabilities, so which is great. In these two aspects, it's great. So excellent financial health, and there's no debts at all right here. So the red color line is flat. Debts to equity, zero. Right? Balance sheet, green, 100% green. Nothing to worry about. And then, are they really servicing some debts? Of course, they have no debts. But this is also something that I look at when I invest in companies. I also look to debt servicing ratio, which takes net interest expense into the account, cash from operation also into the account. So which month or which year do I look at? So I look at the like let's say for Facebook the latest annual report is about 2020. If not, you can look at the TTM tracking 12 months results. So well, my favorite website would be Morningstar. I would extract the fundamentals from Morningstar, the financials, and I would, of course, I've actually squeezed this table or crop out this table into a small table. It's tons of data inside. I could take 2020 or TTM at this moment. So it's zero interest expense. and yeah, that divided by cash flow is, this guy's cash flow rich. All right, beautiful, right? And equate that, yes, definitely zero, no brainer. Let's go ahead. Looking at the intrinsic value, okay. So now there are three sources that I look at, but it really gives us a feel where how the market is evaluating the intrinsic value of this company. So these are just valuations. I do not treat it as alpha and omega. Some people they swear by, people who do value investing, they swear by intrinsic values. But if you look at some sources, they do give you a huge magnitude of difference. And you ask yourself, you look at different valuations from different credible sources, you would really get confused. All right. So now this is what I mean. If you look at this, this is from Simply Wall Street, and you can see that the fair value projected is about 633. That's the fair value, right? And current value it's like 339. It's 46% undervalued at this moment. But if you look at Morningstar, which I would deem that this is the most reliable website if I really want to look at valuations and other fundamental stuff inside. And the projected fair value is about 407. Right now it's about 339. So which means the fair value is red line. And you can see for the past year, like starting from 2018 until now, the intrinsic value has been always higher than the stock price. So pretty good. Now, right now it's about 16.7% undervalued. Right. So Guru Focus is also another website that I look at, but right now it's very close to the fair value. It's very close to the current price. So fair value 337, current price 339. All right. Now doesn't matter. Okay. So it has really a far difference. You can see the three sources now. But what's more important is that you look at the stock with an overall scoring, and what you can see here if we go into the details right here, and price trending over the past 9 years has been giving the capital returns of 21.4%. So I give it 5 marks here. That's so 5 marks means deep green, right? So revenues double digit. So it has been averagely growing about 70% every 17% for the past 9 years. Net income growth 21% for the past 9 years. Cash flow growth 17%. Five. So without going too detailed, what I can say is that the growth and price trend has passed, and it's more than just passed, all right? So it's full marks. Future projections has been all double digits, right? Future revenue growth, earnings growth, cash flow growth, earnings per share. So all the projections are like, the future is bright for this company still. Sustainable margins and cash flow. So it's the highest margin compared to other competitors. We've seen that in the heat map. Facebook has the highest margin, like 37%, right? Net income. So is it considered a consumer brand monopoly? Yes, because it has 75% market share and the rest is 12% and below or 30% and below. Far different. Right, is it selling to worldwide? Multiple geographical areas? Yes, all except China and some areas in Russia. All right, won't go into detail to that. Does it have a network effect? Yes, it does, and a strong one as well. Does it have high switching costs effect? Yes. So users are unlikely to delete account instantly. And overall balance sheet, yes, 100% green. Current ratio is about 5, no debts. All right, this is a debt servicing ratio is actually 0. So I forgot to delete that. That was done last year. And valuations, some have a lot, fair value, 2 undervalued, and 1 fair value. So the score comes up to about 97 over 100 marks. So it's about 97%. Anything that passes about 80%, it's worthwhile for me to invest in my own scorecard. So now, with all the fundamentals sink into our mind right here, and what we really want to look at is currently, now this is not a live chart. This was snapped last at the end of October. Let's go to the live chart. Right, let's jump in. Right, now you're gonna enjoy this. Okay, now if I look at the moving averages. You have a blue color with 50 days moving average. Yellow is the 100. Now it says just breach 100 moving average. And then the green one is about 150. Red is about 200. Right. So it's not down to the you know the last defense at the moment. So it's also breached yeah, some of the significant support levels. Right. So well, I bought in around this area. So what I will usually do is that I'll just like this is I treat this as level one, level two, and if it comes even further down, I'll just buy more. Right, this level, I'll just buy more. All right, so I'll just average in. But the thing is that people might ask, right? So Derek, what happens if you just buy here? Maybe about like I have like let's say I allocate 10,000 maximum. I'll allocate 10,000 USD for this stock and I'll just buy like a USD about 3,300, right? Right here. But the thing is that after this, then the stock starts to continue to go up and don't really get the full position of it. So I still have about 6.6k left to invest. Well, you gotta be okay with that if it doesn't go down further, all right? Because as an investor, you can always keep this dry powder for the next bear market or the next correction. Because anyways, corrections they will come occasionally, like a few months once, half a year once. It doesn't matter. You just keep the dry powder and keep feeding into just keep putting seeds into account if there's any huge correction for great businesses, right? So well, what happens if it goes down further, right? Then I still keep investing like USD 3.3k as long as it goes down, right? So it's like tranches. So you always have got to have a plan when the price goes further down, right? So and doesn't mean if I buy up to level three that it goes up straight away. And there are some instances that this stalls goes down even further, and it goes down even further like and stays there for like between 6 and 9 months, or even between 6 months and even 1.5 months, 6 months to 18 months. Well, and you gotta be okay with that because the markets can overreact and the prices can be overly pessimistic or unjustified pessimism can happen most times. All right, and if you look at the past results right here, and if you actually take a rectangle and this consolidation right here after a rally, it's about this is actually this is actually about 9 months. Okay, let's make a measurement right here. So vertical line from this top August 2020 before it breaks out. Let's say it breaks out around here. So 18, okay, April 2021. So now let's equate that. So you have August 2020. All right, then you have all the way before it breaks out, April 2021. All right, so you see, price doesn't go up in a straight line, isn't it? Even it stalls here. So you have around 4 months. Then this is about let's see. So it's roughly about 9 months, 9 months duration right here before it starts to rally again, right? Breaks out and rally again. So you gotta have that kind of anticipation right here because nobody can predict the price 100%. Even though now it's either fair value between fair value and undervalue, so it could actually even go down further and get and stalls for maybe 6 9 months, between 6 and 9 months before it starts to rally again. So if you see many people would start to buy options, then they buy like 3 months options or 2 months expiration. Most people will often end up expired worthless call options. All right. So even if I would execute options down here L3, right, with bull call spread, which I can manage the capital more effectively. All right, bull call spread, which means if the price, let's say for instance, as long as it's higher than this price, maybe about 320 in the next maybe 12 to 8, between 12 and 18 to 18 months, right? Time. So as long as the price is higher than 320, then I get my full capital or return of capital, right? So, okay, wouldn't go too far with that, and always have a plan. And while you're investing or trading, right? So, yep, weekly charts still looks nice in positive flow as long as the price is above the moving averages. And let's see where we still have more to go after this. Let's see. Okay, I think that's the end of the presentation, and I hope you enjoy this video. Happy trading and investing. Striker X here, signing out.